Good morning and welcome to the October 2019 Pearl Planning webinar. This is your year-end financial planning information, tips. We're starting early, so I'm really excited to share some information for you with a couple months left in the year. I think this will be really valuable for you to plan out and maximize the financial impact of money decisions between now and December 31st. So I'm Melissa Joy. I will be your host today. I'm also president and founder of Pearl Planning. I'm a financial planner and want to make sure this information is relevant to you, but also be mindful of your time today. So, in fact, we're starting with thinking about time. I really intentionally wanted this information to be shared with you in October so that it doesn't feel like an anxious sprint as you go between now and the end of the year. It is critical that with this presentation, I hope you have a pen and a piece of paper because I'm hopeful that there will be 3 to 5 kind of tips that you want to integrate into your calendar. And what I would suggest is that with that paper, you write down the few things that you want to do and also put it into your calendar with a date. A lot of you use an electronic calendar, whether it's your Google Calendar or your Outlook. So map out some times where you can make a little time to get started. If you're a member of a family too, having a little family meeting late October or early November and talking about some of the things that we discuss here wouldn't be a bad idea. Just a 30-minute kind of business check-in to say, here's some things we'd like to do before the end of the year. The number one thing that I think is a disconnect in financial planning is so many people talk about technical tips, tricks, the things you can do, but they're not always linked to your personal financial goals. So I always encourage you to have financial goals, whether it is just to increase your contribution or start giving to a retirement plan, or if it's something that's much bigger, like a big purchase or getting close to retirement or education savings. Write those things down and give yourself the courage of acknowledging that you want to pursue those goals. And with a calendar year coming to a close, it's just a natural time when you like to take stock. It's just what we do as a society. So there's no time like the present to review or create your goals and ask yourself how you're doing. So that would be my first tip, and I think that applies to most everyone. So something you should definitely be writing down and thinking about doing. Now, whenever you talk about year-end tips and you talk to a financial planner, you think, oh my gosh, it must be all about investments. And in fact, I have a lot of suggestions that have nothing to do with investments. Then again, though, I'm starting off and kicking off, going straight to where you think this whole presentation is going to be focusing. Have your investment circumstances changed, and have you addressed that in your investment portfolio? So first, we just talked about goals, and your goals should be tied to your investments in many cases. So review and evaluate and see, has something changed in your investment, in your financial life, your personal life, that might change your personal investing strategy? So I want you to think about that first. Second, if nothing has changed, have you made adjustments to your portfolio to rebalance them or move them back to where they should be? So this year is a year where many investments have grown. Some have grown more than others, and it may make sense for you to adjust things back so that you haven't taken on undue risk. You may have accumulated cash that should be invested. You may need to raise cash because you're using your portfolio. All of these go back into a reminder to kind of maintain and monitor your investment portfolio. And if you're not sure where to start, it might make sense to work with a financial planner, or if you're working with a financial planner but you haven't checked in recently, well, pick up the phone and tell them it's time to have a check-in. Also, though, 12/31 is an important time for investors because if you have taxable investment accounts, those are accounts that aren't your Roth, your 401ks, your IRAs, but accounts where you pay as you go for your investments with taxes, you may need to evaluate your tax circumstances in that portfolio. The reason being is you're going to be paying taxes next April or sometime in between that are both your income from 2019, but also the investment costs, the investment tax costs. So I think it's a great time to evaluate. There's some strategies, and I list them in this third bullet point. There may be some unrealized tax losses that would be appropriate to do tax loss selling for. That's a more complicated topic, so I'm always happy to elaborate offline if you reach out to me. But some other things I'd like you to be thinking about are, is your portfolio in general costing you too much tax-wise, or also just its expense ratios are too high? This is a great time to be reviewing the effectiveness of your strategies, and that's not just the returns that come right off the top, but also your after-tax, after-expense returns as well. So I have this picture of these leaves here because I really think about these choices are kind of you doing your fall cleanup in your yard. There are things that you should be doing over time, and if you do them each year, you'll be more effective in terms of your overall investment results, your investment strategy, and also the risks that you're taking on to achieve your goals. Also, many of your retirement savings choices are kind of calendar-based. So we have deadlines. In some cases, for example, for your 401k or 403b, you have to make your 2019 contributions during 2019. You have a little bit of a delay if you are contributing to a SEP account or IRAs or Roth IRAs. Those are often tied to the time that you file your taxes. But all in all, I show you these two doors because you're going to be making some choices, and not doing anything is also a choice, but I'd rather it be, kind of an intentional choice and not just a default because you haven't gotten around to it. So review your savings, and if you're nudging up or would like to be maximizing your retirement savings, either to get to a match, which I don't call a max, but many people do, or also to get to an amount that is saving more so you can retire earlier or more successfully, then this is the time to be reviewing them. And it's also the time to be making a plan for 2020. It's great if you can come into the beginning of the year with that plan, because then you have a full 12 months to contribute, and it won't feel perhaps as punitive if you're trying to do that catch up later in the year. So review what types of accounts you're using. Make sure you're using the right accounts. I have more and more people that I come in and work with me who are contributing to Roths, especially in their employer plans. And it might be time to review and make sure that this is an appropriate strategy for you. It depends on both your current and your future taxes, as well as some of your own philosophy and that of your financial planner. So I want you to make sure that you're making the right decisions. And if you're scratching your head saying, I'm doing as best I can, but I'm not quite sure, that's a great time to talk to your financial planner, your CPA. A coordination for both can be in the picture. So I want you to be thinking about that. Next, if you are retired and you're over age 70 and a half, or if you inherited funds that are in a retirement account, you may be required, and many of you are, to do a required minimum distribution. Other people, I call it an RMD, other people call it a minimum required distribution, but this is often applicable if you're at age or beyond age 70 and a half. And it's not a choice. You have got to do this. There's a big penalty if you fail to complete your required distributions. Now, if you've inherited an account, then you're going to be forced to do those distributions oftentimes, and not always, but typically across your lifetime. Different rules apply based on the type of account, but you want to get things in order. A couple small nuances that you may not be familiar with. If you have 5 individual retirement accounts that are all subject to an RMD, you can take your entire RMD out of one account. But if you have 3 different types of accounts, let's say you have a 403b, a 401k, and an IRA, well, in that case, you need to take 3 distributions. So you need to be aware of the technicalities of the rules. Also, certain types of Roth accounts like Roth 401ks may have an RMD, whereas the IRAs don't. So there's a lot of nuances in there, and I just want to make sure you're paying attention and getting a personal plan that really works. It's also, like I said just before, it's a great time to make a plan for next year, because you could be fulfilling that RMD over many months, or it might be preferred that you do it all at once. So everything has some flexibility in there as long as you're meeting the requirements of the IRS. Okay, also, Tax laws changed last year, and many of you may have been surprised at, the standard pattern of whether you were getting a big refund or were paying a certain amount of money. Those things may have changed as well, and we're still getting used to that tax law change because 2019 is only the second year where all of those rules apply. So I want you to ask yourself, have you been meaning to make an adjustment in how or what you pay in taxes because the withholding isn't quite perfect? Are you subject to estimates because you're a business owner or contractor and you need to do some review there? All in all, it really makes sense to be looking at your overall picture when it comes to taxes. Many of you hopefully are working with professionals like CPAs or tax professionals, so bring them into the loop. Financial planners can help as well. And I also suggest if you have an unusual year where either you have a lot more income than you've been used to, something's changed, hopefully it's changed that way for the long term, or let's say that you have a very low tax year either because of a change of job, change in business, a gap in work, or an early retirement, that should be analyzed as well because there may be some strategies, and I'll just pull it out of the air, Roth conversions if you have a super low year, or realizing some searching kind of for losses if you have a super high year. You're going to want to be reviewing that before 12/31, and you don't want to review it the last week either. A lot of people aren't working as much the week between, the holidays and New Year, so make some time to review your current tax year situation so that you have a couple weeks or months, a couple months to make some adjustments. Also, this is the time of year, and that's another reason I really wanted to talk to you in October. Open enrollment occurs if you are working at a corporation or a larger business. Also, though, it's the time of year where you make elections if you have coverage under the Affordable Care Act for your health insurance, and this is the Medicare open enrollment period as well. I would make a note, we have our most popular video in our webinar series is on 2019 Medicare, so make sure you look that up or reach out to me if you need more information there. But I want all of you, whatever types of decisions you're making, to take those off of autopilot. Don't just default into what you've always done. While what you've always done may be correct, I want you to review and reflect and make sure that you're making the right decisions and get the best enrollment benefits that you can. So review your plan, see what's changed, have a conversation. This is one of those great times to put on the calendar for an evening or weekend if you are coordinating with a partner in your family. Set aside some time before that last, date. I know my husband and I are sometimes guilty of waiting till the very last second, and you can't be as thoughtful about making changes if it's last second decision. So this year I'm putting that on our calendar for the weekend so that we can talk about it and go through everything when we're not kind of under the gun. Make sure that you're filling in gaps in insurance. So some of my clients don't have long-term disability offered through their employer. Then it's important to review and fill in the gaps. There might not be portability for the life insurance that's really important for you in case something goes catastrophically wrong. Or you might just be offered a somewhat adequate or inadequate coverage and you need more. It's a great time to decide, I need to fill in some gaps. Also, very underutilized here in America, but especially for people who hope they can retire early, I strongly encourage you to consider, I'm not saying that you should do it, but consider the option of a high deductible health plan if it's an option, and then start to look at saving in a health savings account. Now, this is only valuable if you have enough money to put into a health savings account after all the bills are calculated, but that account can be an extraordinary tax vehicle. You get a tax break up front. It's tax-free when you take it out for health costs. It can be invested so it grows, which very few people are aware of or really implementing. And so, with healthcare being a huge cost in retirement, that's something I want you to think about, and open enrollment is the ideal time to take that into consideration. Now, estate planning and legacy is less linked to any particular time of year, but I like to talk about it now because it's probably, for many of you, on your to-do list. That's what I hear from many of my clients, and you just haven't gotten around to it. And again, I want to use that calendaring where you make a commitment to yourself. This is one of your, it can be a financial goal, honestly. I want to get something in place because I know I need to. And while I don't do estate planning, I'm always happy to help connect you with someone who might be the right fit as an attorney to draft the documents that are appropriate for you. Everyone is personal and different, but I just find so often it's kind of a burden for people, a stress burden, where they know they need something and they just haven't gotten around to it. There's difficult questions and decisions that are related. So let's make time and put it on the calendar as a priority or a goal to get things in order. There is one component, though, that is time linked to the end of the year, and that's if you're making gifts that are larger to family members. There's a limit on how much you can give each year. You may need to file a gift tax return. All of those things kind of are coordinated with some year-end activity. So I like to remind you of that, but many of you, it may just be like, get our documents in order, review your beneficiary designations. I still find beneficiary designations that aren't updated. Maybe you're married with kids, but it's still your mom or dad that are listed because you've been at the same employer for 20 years. Or a couple cases I've found where no one's listed and you're not getting a reminder from the old plan where you used to work to name a beneficiary for your old retirement account. So there's a lot of, kind of housekeeping, but also some big rocks that are related to this goal of estate planning and getting things right. Year-end is often tied to thoughts about charitable giving, and a lot of that is linked to historically you're able to itemize in your taxes and reduce your taxes based on your charitable gifts. That's not always the case today, because the deductions for either a personal deduction or a married standard deduction have gone way up with the recent tax law changes. So you may have found that, we used to itemize and we don't now, and that could change, the way you perceive charitable giving. First, I'm here to say I think, giving to nonprofits and charities is something I strongly support. Hopefully it's tied to both your personal preferences and your personal values as an individual or family, as well as that tax benefit. You never want the tax, kind of tail to be wagging the dog. But the tax laws have changed, and there are a couple strategies that may help you to still get a good tax break. So you may want to consider bundling your charitable gifts where you make a gift for 2 or 3 years at once. And that's something I can talk more about how to effectively do that in a follow-up conversation. Also, related to that bundling, some people are using donor-advised funds, which are an investment vehicle that also can receive appreciated stock, which has a tax kind of benefit, and that's something we could talk more about in depth. For those that have required minimum distributions, those of you who are age 70 and a half, qualified charitable distributions are also a tax-effective way that doesn't require itemizing. And as you approach the end of the year, think about the deadline of 12/31 to count, because some of you still will itemize. Think about Giving Tuesday, which is kind of becoming a national tradition, just like Black Friday or Cyber Monday. So a day that's for giving, that's the week after Thanksgiving. And I love the concept of sharing family stories about giving. It relates back to family values. It actually has some very powerful effects on how your family members may think about money, especially thinking about the next generation. It's one of the first things that when you have wealthy families and are advising them about how to maintain and retain wealth, family giving is actually a very powerful builder of good family dynamics and values. So I don't want to forget that component that has nothing to do with taxes, but everything to do with, kind of building a powerful family value system and hopefully some powerful skills for the next generation. Speaking of the next generation, I want you to also be preparing for education costs, and this goes right back to that wills and trusts with estate planning, where you probably need to think about it, or it's important to you. I don't want to put your personal preferences on how you think about saving into. I don't want to assume, but it's first very helpful if you sit down and kind of have a strategy of how you think about education. If you have kids or relatives that it's important for you to go to college, do an education savings check, and you may have been thinking about starting a 529. Maybe now's the time. You do get a small tax credit if you're in the state of Michigan for 529s, and it may be the case elsewhere. It just depends on the state. If you have kids that are going to school, there's not enough people that are completing the financial aid forms, the FAFSA, and even if you think, we're not going to get any need-based aid, you might be surprised, and many times merit-based scholarships are also linked to completion of the financial aid forms. So make sure you've done that. The registration was opened earlier in the fall. And then also make sure that you are paying in a way where if somebody's coming out of pocket and you're eligible for tax credits related to education for kids in college, that you're getting some of those benefits. That takes a little bit of coordination, and I'm happy to provide you some information. And finally, talk to your kids about money. We don't do it enough. We know that from studies on financial literacy, from surveying kids as they become young adults. So use the holiday season as you prepare a budget, or maybe you give them a budget for family giving. Make sure that you are incorporating those financial lessons that we used to see all the time when we were growing up, because our parents had a wallet and we could see real money. It wasn't the click of a switch or a button on our phone. So make sure you're incorporating money conversations with your kids. So I have just gone very quickly through a lot of possibilities for your year-end financial game plan. And I hope that you found it valuable. I'd really encourage you, hopefully you have that sheet of paper where there's a few items that are really important to you to get done for this next year. So here are your action steps now. First, map out the last 10 weeks of the year with appropriate action items. Also, if you send me a request, I'll send you a year-end financial checklist that you can use now and in the future. And then finally, if you enjoyed the information that we've shared today, I'd love it if you joined our newsletter list. Just shoot me an email at melissa@pearlplan.com, and I'll make sure that you're getting information on this and other webinars and events, as well as our monthly newsletter where we have blog posts and relevant actionable items, as well as a replay on this presentation. Just for a reminder of how you can reach us, and we're always happy to help and answer your questions. Here's our phone number, my email, and then our location. So with that, thank you so much for joining us today, and I'll look forward to having those conversations when it's appropriate about what to do between now and the end of the year. Have a great day.